All investments are categorized into three: low, medium, and high risk investment. Low, medium, and high risk investment. Today we'll focus on low risk investments. What are some of the attributes of low risk investment? Number one, low return, minimum exposure, edge against inflation. Let's stop at these three attributes for now. Low return, meaning that it won't pay you extraordinarily high, like if you're investing in stocks or in other kind of investment. Minimum exposure, meaning that you're not bearing so much risk. It's always best for you to start from minimum exposure when you're not likely to lose so much money. The last one is edge against inflation. A lot of low risk investment does not edge against inflation if you are doing it in the short term. The fourth one is compound interest. And I will demonstrate that with an example later on in the video. What are some of the examples of low risk investment or low risk assets? Money market mutual funds, bonds, government bonds specifically, government bond, T-bills or treasury bills. We can add real estate to this as well. And we can add commodities, especially like gold and other precious stones. So these are some examples of low-risk investment. Let's take them one after the other. What is money market mutual fund? From the word mutual, let's start with that word, mutual. Mutual fund. So another word that you can use to replace this mutual is cooperative. Cooperative. Or you can say it together. Mutual fund is essentially someone that is called a fund manager. It develops a bucket of fund, and then it receives money from different people into that bucket. So let's say Shola contributes 25,000 naira into that bucket. Stephanie contributes 50K. Sheyi contributes 75,000. Tolu contributes 1 million. Janet contributes 2 million. So this guy has been able to collect money from all these people. He will now invest all of these resources into asset classes that they cannot invest to as individuals. For instance, if you want to invest into treasury bill as an investment in Nigeria currently, within the primary market, you need minimum of 50 million naira. I want to invest in treasury bill. I don't have 50 million. What is the way forward? I can get a mutual fund that invests into treasury bill and put my 25K in it. So the fund manager gathers the fund. Because of the gathering of the fund that this guy has done, he's able to afford this 50 million. When he gets the interest from it, he will now share with everyone that has interest in that fund. So that is the way mutual fund works. Going back to low risk investment, this attribute, I want to now juxtapose this attribute against money market mutual fund. Money market mutual fund in a country like Nigeria, you only need about 5,000 naira to start. And the journey starts with identifying people that are called asset managers or asset management companies. These companies are licensed by SEC. SEC is Securities and Exchange Commission. That is the body in Nigeria, also globally as well, that regulates investments. If you want to receive investment from the public, you need to have a SEC license. So these guys are SEC licensed to collect money from people and invest on their behalf. So you can start with as low as 5,000 naira. And the good thing with money market is you can build over time. So instead of putting 5,000 naira into your normal savings account, you can put it in your money market mutual fund account and you can build it. So I come across another 10,000, I put it in that account. I come across another 20,000, I put into that account and all of that. So that's the way it works. It is low risk. It is low return. A lot of mutual funds currently pays between 18 to 23% per annum. An investment is always annualized. For you to get the full 18 or 23%, that investment must have taken the course of 1 year. Low return. Minimum exposure, meaning you're not taking on too much risk. You are unlikely to lose your money when you invest into low-risk assets. Any of these guys, you are unlikely to lose your capital when you invest into them. The only challenge is this hedge against inflation. A lot of this investment cannot hedge sufficiently outside real estate. A lot of the other investment cannot hedge against inflation. Let me give you an example. You have 1 million naira right now to invest. You saw an ad for money market mutual fund, 20% per annum is the interest that is promised on that investment. If you put the 1 million into that investment, at the end of the year, you would have 20% of this is 200,000 naira. Plus your principal, you have a total of 1.2 million at the end of the year. Currently, inflation in Nigeria is 24.4%. That is the rebased inflation. Inflation is 24.4%. Your investment has paid you 20%. You have not been able to hedge against inflation. You are still losing money. You are still on minus 4.4%. What should you do at this point? The first thing is you can diversify. The way to protect your money against inflation is to diversify. What does this mean? Don't only do money market and all this low-risk investment. Also do a combination of medium and high-risk asset because everything would add up ultimately. So that's the way it works. The second approach is to take a long-term view, meaning that you don't do the investment for 1 year and expect that you're going to hedge against inflation. Do it for more than 1 year because money market pays compound interest or gives you compound interest. What does compound interest mean? It is interest of interest. So this same example, in year 1, let's say this is 2024 or 2023. You invested 1 million in 2023 at 20%. By the end of 2023, you have a total of 1.2 million. You didn't need this money, so you left it in that account. In 2024, if the interest is still 20%, they will pay you 20% will now be on this 1.2 times 20%. So this will give you 240,000. That's the interest you're getting for year 2, plus your principal of 1.2. So the total you have in that account at the end of the second year is 1,440,000. So if you look at it critically, in year 1, you earned 20% as interest. That in 2023, 20%. 2024, you also earned 20%. You have earned a total of 40% interest. By year 2, you're already above inflation, which is 24.4%. You can see that is how compound interest can put you above inflation. So, money market. What is the other thing that you need to know about money market? So how do you get started on this journey? Identify an asset management company. And the good thing is a lot of them also have apps these days. Just go on their Google Play Store or your Apple Play Store, download the app and start to invest. Several of them. There are over 100 asset managers in Nigeria. And to give you more like an inclination or a guide or a guidance, a lot of these asset management companies also have banks. A lot of the banks that we have right now also have asset management division, right? So go to the asset management division, open the account, and start building wealth.